so long as we have negative momentum on that 1 hour chart, we do have negative momentum there on that 1 hour chart, there is possibility that this is still going to extend until we get positive momentum on the 15 or the 1 hour. We still don't have these. Then we can consider we're going to be seeing these levels. This is what's important about this. This is of course a triangular formation. It's an ending diagonal. You would want to buy a cycle extreme, but let's just stand out of cycle extreme for this point. So long as we're having negative momentum again on the 1 hour, we'll investigate the momentum picture. You're able to get 155.6. You're able to get 155. That's it. There's very mild possibility to get 154.3. All these are buys, very strong buys. Probably this will be buys in wave C and not A, but at least 155.6 is a buy in A. 155 is a buy in wave A to take us to 158. We're looking at isolating the internal corrective cycle on the 15-minute chart. Everybody now understands this technique. We're having the same momentum plot. You can see we have the same momentum plot here. This is very important because this will be our trade entry. If you wish to be trading this issue, this trigger should evolve in something like 24 hours. So we are focused on this momentum plot here. There was a cycle extreme. Those are not, now there is a cycle extreme. This is what you get when you have cycle extremes. There was a bounce at one. Actually, this broke lower all the way to 155.6. All right. There are arrows all the way down to 155, but I doubt we get there. If we get there, you want to have a buy entry right away. Very strong buy entry at that point. I doubt in level A we get there. The trigger is that once you have that cycle extreme, you wait. You're not in any hurry of anything, because at some point, this is a cycle extreme, momentum becomes positive on the 15-minute chart. Okay, so we have nothing to worry about. We wait. We have simply an alert from our station. Once momentum breaks above zero and breaks or begins to contest over both levels, this is 15-minute chart. We had that cycle extreme. Look what happens. So once momentum breaks above zero, we're here. All right. We just buy market. We are seeing an inverted head and shoulder. Immediately the market is just on the rise. There's nothing more to actually contain it. All right. And we will do the target levels projected for that move. Okay. So at that point, there was a 1, 2 here. Market took you all the way to 3. All right. So your entry at that point was something like 156.2, like where we are right now. Any corrections, you'd simply need a stop below level 1. That's all there is to it. So if you had even both market 156.2, 156.5 even, your stop is just at 155.6 below level 1, and this took you all the way to 156.6 and 156.8. all right. Not much of a move, but if you are well invested in it, you're buying that 15-minute chart on a daily basis, well invested in it, you would make good money. We're gonna get the same trigger now, maybe not now, not today, but we expect the same trigger actually to evolve tonight or tomorrow. So again, you're seeing that cycle extreme. There's a cycle extreme here. That green arrow comes up sometime. We're looking at this wave. This wave broke lower, so it did the 127.2% projection of a wave 5. The move is over. All right, we can either buy now half size, and once we get that triggered, we add. We're going to be doing wave B. Wave B takes us to 158. Okay, so we're buying at around 155.6. We're not going, of course, we're just going for 158. We have here 157.84 right above it. These are the February pivots, and even 159. Let's take a look at the real market and envision how this can really work. We're just very close now to that trigger. Now we understand what's really going on. There was a bounce. I just said we finished 5. That was a bounce in 3 here. Oh, sorry, the market broke lower in 3. This was a cycle extreme, right? Just bear with a second. Over here you had a cycle extreme, and then the market did a 4. This was probably a 3. The market did a 4, rejected below 1. Whenever there's a cycle extreme, consider the market will move another 27.2% lower or 38.2% lower. This is it. This is wave 5. This is the end of the whole correction. Should be. Everything is now ready for a long, even if you don't have momentum. I was just saying we get long on a trigger, but in reality we get long the market 156.33, or we get long this growth issue here. There is a 1 2, at that point there's a 1 2 3 4. This will be moving quite fast. It will only reject at the neckline here. Okay, so we just get long the market. The stop is just below level A, 155.2. We're buying 156.2. We could go, of course, half size once we get a trigger, like we're just shown on the 15 minutes. Everything is good. We add our remaining size and we go to 158. What's going on currently with this, with the Ukrainian problem is, of course, increasing, or is actually bullish yen. It is risk adverse, and we're buying against, actually, we are buying into risk, sorry, not against risk, into risk. Probably we're not with the trend, but we expect it is a buy opportunity. Disruption, let's move on. So just to reiterate what has been said on oil, we're looking at some kind of new datum price for oil in future, but this really should not concern us. What concerns us is that we are confirmed we go above $100 levels and where to take our profits. So we're looking at a good spike into $120, $105, $110 if you're conservative, because of the current buying pressure due to the developments in Ukraine, and therefore we just need to hold, all right, until we get to these levels and liquidate by automated take profit orders. If you're not, of course, in the market, you would need at least to buy half size. We did already detail how to do level management. If the market falls all the way down to 76, we'd go back to that again, or $78. We'd go back to take a look at this again towards the end of our analysis. But gold, of course, oil is a buy. There is really no problems with the price right now. You would want to, we would consider that we would want to hold on to the price and have a take profit, say at $118, or make use of that spike. That is, it's going to be very quick and we'll probably not have time to act.